Welcome back. The debut on the share market of Briz Connections this week was a major disappointment, with the airport-linked toll road manager plunging 86% after the float was launched. So what is the future of infrastructure? Are public-private partnerships the way forward? The Business Channel's Carson Scott asked Tony Shephard, the chairman of Transfield Services.
Carson, we've proven without, I think, any doubt the success of the PPP model of delivery of infrastructure in Australia over the last 20 years. The challenge going forward, I think, will be to refresh and streamline the model. We have serious issues in world debt and equity markets with the availability of capital and the appetite for risk, but I think infrastructure represents a quality asset in a difficult environment, generally indexed to inflation and what have you, but I think we need to refine the model. The major moves for refinement, I think, come through things like the complexity, the cost of bidding, which is almost unbelievable at times, and I think the risk allocation, and I guess perhaps the focus on the long term. I think the PPP model in Australia has shown a degree of inflexibility, which I don't think works really well in a 20 or 30-year concession.
What level of confidence have you got that the public are going to come online with these projects, given the spectacular disappointment of Briz Connect this week?
Look, Carson, I agree. I think the thing is that we have to distinguish between sort of short-term market reactions and long-term realities. If we take, for example, Connect East in Melbourne, this is a listed stock. It's delivered the road 5 months earlier. Its traffic looks, reasonable. It's on budget, and yet it's trading below its issue price. It's caught up with a general reaction amongst investors against infrastructure stocks, probably caused by a couple of outliers. And really, I think the market will correct over time once it starts looking at the fundamentals of each of the investments. So, most of the funds, if you took the Macquarie funds, for example, not heavily geared, got a lot of cash, spitting off good yields, and yet they're being marked down like they're a high-risk investment, and they're anything but that. So my view is the market will, in fact, recover over time and will, in fact, start to value stocks on a proper basis rather than an emotional basis.
I'm just wondering how much confusion there is surrounding the ETS or the emissions trading scheme, and how much that uncertainty is contributing to investor scepticism towards these projects.
Well, look, there is no doubt that doubt and uncertainty regarding ETS, fuel prices and what have you is creating an uncertain investor climate for all investments. But at the end of the day, if you look at something as fundamentally as infrastructure, it's the last thing that people are ever going to give up, whether it be private transport, public transport, water treatment, power, or whatever. It's a required consumer good. It's generally indexed to inflation. It has to be the sort of asset that you would think a superannuation fund in times of uncertainty would want to put its capital.
Everyone said that Enron was watertight, then we know what happened to that. And yet you've said in passing that the cost from ETS could lead to an Enron-style collapse. So there is that potential, in your view.
Well, I agree. In the Enron case, and what I was alluding to there was not so much that we have an Enron situation in Australia. What I was alluding to there was that in Enron, when Enron collapsed, and it collapsed, I think, because of huge undisclosed gearing, bottom line, but when it did collapse, it was the counterparty to a lot of power purchase agreements and contracts for the power supply. Of course, when the counterparty collapses, the contract collapsed, and this brought about the collapse of the electricity market in California. So I was really alluding to there that the risk of putting our generators under significant pressure in Australia could lead to that sort of situation, rather than the generators were, perpetuating Enron-type financial scams, frankly.
You've also said, though, have you not, that we could be looking at losses of up to 5 years' worth of economic growth coming from this ETS on business?
I agree. I think if ETS were introduced the way Professor Garneau was proposing, that was a real risk. However, I think the green paper issued by the government recently assuages a lot of those concerns by making it clear that they would be implementing ETS carefully and with due regard to the economy.
How important is it that we get some clarity over actually a start date on ETS? We've got a government saying it's going to happen in 2 years, and opposition saying don't sign up, back up the bus, let China, let India come online. They're the key emitters. Don't let our businesses take the brunt of this until we know how it's going to play out globally.
Well, look, the first thing is this: it will be introduced when it will be introduced. I assume that the federal government, being rational and intelligent people, will not introduce it before they're ready and before they're satisfied that they've got reasonable and sensible protections in place for industry and for the consumer. So I won't be drawn on the time issue. I'm not privy to their modelling. I'm not privy to the mechanics of the introduction of it, whether it's going to take 1 year, 2 years, 3 years or 4 years. I really am not in a position to comment, but I think we can rely on the assurances of the government that they will introduce it in a sensible and a rational way with a view to avoiding economic dislocation.
You're a captain of industry, though. What sort of soundings have government been taking from you?
Well, we've had our views expressed through various industry bodies, and both directly and indirectly with relevant people. And we have no feeling that the government is not listening.
Now with a look at what we can expect on the economic